Rick, I want to just get your quick take on the markets, and you too, Matt. Your key theme seems to be investors should temper their enthusiasm this year. That's what I'm hearing from you when I talk to you. Can you explain that a little bit? Temper your enthusiasm.
Well, we have just come off 13 years of the biggest growth in the stock market ever. The past 3 years, the S&P is up 20% a year. The long-term historical gain for the S&P is 10% a year. So we've doubled that annually for the past 3 years. We're all familiar with regression to the mean. We cannot sustain these very high double-digit returns in the stock market. It's not realistic. And in fact, the Wall Street Journal had a story on their survey of 13 major banks on Wall Street, and their average expectation this year is 4.5%. So stocks are not expected to do as well as they've done over the past several years. We also have big problems in the bond market because we're seeing a rise in interest rates. And we all know the drill. When interest rates go up, bond values go down. We also know that real estate is severely challenged right now. Homeowner prices have skyrocketed over the past couple of years due to the pandemic, while commercial real estate is in the doldrums because so many people are working from home. So there's huge pressure on real estate prices right now. So for all these reasons, we need to recognize that past performance doesn't guarantee future results, meaning just because we've done really well over the past 3 years, 13 years, doesn't mean we're going to have that great a 2022.
Matt, what about that? I know you're not a global strategist for Bitwise, but you're a good market watcher. I've known you a long time. What Rick is saying makes some sense to me. I am a bit of a market historian. Mean reversion is a characteristic of the equities and the bond market. We've seen years where growth has outperformed value. Value is doing better this year. We've seen many years where the S&P in the U.S. has outperformed Europe and China, and yet Europe and China are outperforming this year. Does mean reversion make any sense in terms of looking at the markets this year? And do you have any take on that?
I think it absolutely does, Bob. As you said, I'm not a market strategist, but I speak to financial advisors every day about crypto and their broader portfolio. They're feeling all the stresses that Rick mentioned. Added to that, you can't just sit in cash because inflation will eat you away and eat away your principal. So you're really in a box. I think that's pushing people to look at more alternatives, look at places where strong secular trends can overwhelm sort of the negative risk-off sentiment, and look for areas like deep value, emerging markets value, international, which has been overlooked for many years. I do think there's a bit of a rotation there, and you're going to see sort of a barbelling into those less loved areas and into the disruptive innovation areas that Rick talks about so eloquently. So that's what I hear from advisors. That's what I feel in my own personal portfolio.
Yeah, that makes complete sense to me. And I want to remind everyone, Rick has got a new radio show out. It's called The Truth About Your Future. It airs every week. It's covering 5 topics that matter most. Rick, 20 seconds. What are those 5 topics you're going to be covering?
Longevity says it all, Bob, because we're going to be living so much longer, and that means retirement security is paramount. And how are we going to pay for our long retirement of 30 or 40 years? The best investment strategies now are exponential technologies, blockchain, and digital assets. And if we're going to live to age 100, we better take care of our brains and our bodies, and that means health and wellness rounds out the 5. This is the subject we cover every weekend, the subjects that matter most, like you said.
All right, Rick has got a new book out, The Truth About Crypto. It's going to be out in May, I believe, but you can see it on Amazon.com right now. Take a look at it.